Hello, and thank you all for joining us today for our first in a series of webinars, Building a Resilient Payroll Payments Platform. Feel free to use the chat window to tell us where you are today. Please also feel free to use the chat window for any questions that you might have towards the end of the session. My name is Ian Giles, and I'll be hosting today. I am the payroll strategist at Papayaglobal, and I'm based in the UK. I've worked in payroll for over 20 years, and in that time, I've been the client and the customer in startup and matrixed environments in industries ranging from retail and beauty to aerospace. I've delivered payroll solutions to populations in excess of 100,000 and in over 160 countries. I'm joined today by Suriel Dahan, who is the payments CTO here at Papayaglobal. Would you like to introduce yourself, Suriel?
Yes, thank you, Ian. My name is Suriel Dahan. I'm the CTO, and for the last year and a half, I've been building, along with our teams here, Papaya's payment platform. Prior to this, I was chief architect at a large global payments platform, and have had over 20 years as an architect and chief architect in very large companies across the world.
Thank you, Suriel. I'm also joined today by Ger Baran, who is the VP of Payments at Papayaglobal. Ger, please introduce yourself.
Hi, Ian. True pleasure to be here this evening. My name is Ger Byron, and I'm the VP of Payments at Papayaglobal, working closely with Suriel on connecting more delighted customers with our payments platform.
Thank you both. As many of you know, the last mile in global payments is the movement of payments from a bank to an employee, for example. They're often seen as a challenging and time-consuming when it comes to managing multiple countries. I'm giving away my age here, but I recall many years ago having to walk into the bank, withdraw a pre-arranged sum of cash in pre-arranged notes and coins, take it back to the office, count it out, put it into envelopes with payslips, and distribute to employees. When they came in, it was all hands on the deck, and everybody stopped, and this went on for days, and it was just for a single country. Last mile payments are painful. There hasn't been a quick and clear win until now. By the end of the session, you'll be able to see how Papayaglobal can solve your complexities and how we can save you time. Papaya is making payroll payments easy regardless of geography. Our game-changing payment solution is a big step forward in that sense. It facilitates cross-border transactions without requiring wire transfers. It allows for payment processing within 72 hours and guarantees complete accuracy and compliance. This sets us apart from other technology vendors and will add another layer of assurance that your global teams will get paid on time every time. Okay, so the agenda for today, we are going to cover the following topics: why are global payroll payments so complex, KPIs for an effective payroll payment process, and modern payroll payments platform. This should leave 10 minutes at the end to ask Suriel and Ger questions you might have. Please ask them in the chat window, as I said. We can just move on to slide 4. Okay, so what makes it all so difficult? There are two reasons: the sheer scale and the variety of them. The global labor force is 3.5 billion. In 1991, that number was 2.3 billion. That's a 1.2 billion increase with no real change in process or technology in over 30 years. There are some 213 million businesses in the world. For a moment, let's say they have employees in a single country. Let's also say that everybody is paid monthly. Every business has to make one tax and social security payment and 2 third-party payments to pensions and benefits providers. That totals 50 billion payments. Make that 20 countries and the number becomes 195 billion. 50 countries becomes 425 billion. In reality, with multiple pay frequencies, entities, pension and benefit providers, that number is in the trillions. Suriel, what's your take on this? Why do you think we've seen little change in that time?
Well, global banking is fairly new and bank transfers is fairly new. But when you add into that all the complexities of payroll, the local regulations, be it the banking local regulation and the payroll local regulation, the difference in currencies, the difference in even holidays across the world, and the desire to actually get it on time and precise causes a lot of friction because the banking system isn't built for global payroll payments. And this is really where we come in.
Okay, thank you. Good. What happens when it goes wrong?
So one thing that jumps out to me is the impact of payrolls done badly on employee retention. The fact that 44% would consider leaving if paid incorrectly is a very scary number. Connected to this, it's also clear that this industry is still extremely manual. If 8 in 10 errors are done due to bad data.
Okay, thank you. So how do we put our finger on what the problem is? According to the surveys, the polls, the conversations you have, payroll accuracy runs at circa 95.5 to 99.9%. So there's no problem. I think wrong. Payroll has been slow to get on board with payroll technology, and as much as 25% of payroll is still done by hand, often with pen and paper. SLAs report the basics at a high level and rarely get renewed. If you want to make data-driven decisions, you need better insights. Your KPI should be targeting where to get to low or zero touch, achieving higher rates of accuracy, standard processes, maintaining expertise, increasing compliance, and improving governance. You will see a reduced effort and error in handoffs, increased knowledge, greater control as more capacity to get into the value-adding activities. A great way to determine what you need to do and how successful you are is by measuring success and payroll maturity. Payroll is one of 4 things. It's immature. It has high touch, is heavily manual, overly complex with high error rates. It can be reactive, working one cycle to the next, always firefighting problems. There is more than needed manual effort. It can be controlled. It's focused on improvement, increasing knowledge and achieving excellence. It has a reduced amount of errors and effort. And then the gold standard is strategic. It influences other functions, delivers value-adding activities. Both employee and business satisfaction are high. 2 of the biggest things you can get out of achieving all of this and getting things right will be one-time approvals. No more backwards and forwards between you and your payroll provider and your payroll team. 0 out-of-cycle activity. Imagine no more supplementary payroll runs, no more eating into the next cycle. Traditional networks for sending instructions are at the root of legacy processes, which allow 0 visibility and have slow settlement times. Payroll payments are super payments, not your run-of-the-mill payments. It matters when they hit bank accounts. Ger, can you expand on why making payments in this way is less than adequate?
Definitely. A provider that doesn't fully capture the difference in handling payroll payments might fall into one or more of the following challenges. Late payments, which is the holy grail for us, employers and employees will not tolerate a late payroll transfer. More so, in some markets, labor law actually makes the payments to be by a certain date. On top of that, a provider that does not put enough attention to the identification details of the payment will risk late payments as well. More intermediaries translate to unnecessary fees or higher currency exchange rates, and the list, as you can see, goes on and on.
Thank you. Suriel, what does a modern payroll payments platform look like?
Well, here's the thing. Usually you want to fund out of 1 or 2 currencies, and you want to ensure that the money arrives in multiple different currencies across the world. And every one of these countries needs to get the money on time in the precise amount, no matter the effects or the banks that happened along the way. Every country may have a different payout date, may have their own banking holidays, a different banking rail, and managing all of that without the local knowledge be it complexity. You want to have a single location to manage all that and ensure that all the compliance issues, the banking rail issues, the Forex issues, just that get taken care of. Be it if you're financing 10 workers across the world or 5,000 workers across the world. It should be unified, it should be scalable, it should be precise. Obviously has to be super secure. Again, these are the highest type of payments that go out. These aren't $20 here and $50 there. And obviously what we want to do is we want to minimize the number of days or time in general that I want to fund these in advance. I don't want to fund them 2 weeks in advance just to ensure that I don't miss a pay date. I want that to be minimal, and I want to ensure that I take into account the Forex volatility that may occur, and I want to fund the minimum amount necessary in the minimum amount of time before I actually have to send these payments out.
Okay, thank you very much. That makes perfect sense. We've highlighted some of the problems businesses come up against whilst processing global payroll and payments, and what you can do to get in front of both. I'm going to turn the floor over to Suriel and Ger, who will tell you what Papaya is doing to change the way that global payments are made. Over to the both of you.
So to these reasons, at Papaya, we spend time to unite payroll and payments to one seamless offering. Our global platform provides our customers with an automated system that has global coverage, leveraging multiple types of payments. This all translates to faster payments. We choose the optimal payment route to satisfy for both time and cost. Suriel, over to you.
Okay, so one thing you have to understand is we didn't just run on other PSPs. We are fully regulated in 6 different areas around the world to ensure that we are as close as possible to the banking rails. This means we can actually manage the entire cycle without actually landing the money at the end. So we can do this on and on and on throughout the month. So every time we get an update on what is happening, we can forecast how much money needs to go out, how much money needs to be funded. We can take into account FX volatility. We can take into account banking holidays or any other thing that a banking rail might incur along the way. This adds to what we call the predictive funding, allowing you to fund with the smallest buffer and as close as possible to the payout date, just so that you can manage your cash flow much better. Skip that. Let's go back one. Okay, so the second thing is, doesn't matter where you are in the world, you want to ensure that once you click that send, it gets there. But not only gets there, the precise amount lands. And you've all seen this, there's intermediate banks along the way, sometimes adding more time, and sometimes even adding more fees that you didn't take into account. Now, this doesn't interest the employee. The employee needs to get the exact amount to the cent. This is where we come in. We ensure all of our rails ensure that the precise amount lands. So any extra fee that might have been done along the way was pre-calculated in our dry run, and you already knew about that the moment you hit the approve. So we ensure that the exact amount lands, and it lands on the exact day, no matter where you are in the world. And we'll take everything into account. Some of your cycles may go out on the 28th, others on the 24th. Some might take a day, some might be instant in 15 minutes. We take all that into account and ensure that everyone gets paid the precise amount, the exact time. And now we're getting to the second one. When your employee receives the money, 2 things really are important. A, we need to ensure that they're marked as salary. This is important for local regulations and even for the credit score of the employee, because when the bank sees a large sum coming in and it's marked as salary, that makes a difference in how the credit score and how compliance engines run in the local countries. In addition, you want to ensure that your worker receives the money from you. You don't want them to see an intermediate bank being the sender or the ultimate debtor. They want to feel like the money originated with you and landed in their account directly.
Okay, so now you know. Thank you both. That kind of like takes us into the Q&A part of the session. We've got a couple of really good questions that have been brought into that section already. So I'm going to get one of you to take one of them and one of you to take another. And maybe if we run out of questions within that, we can get people to take themselves off mute and they can actually ask you the questions themselves. So for nobody in particular, is this available for only payroll customers or is it EOR too?
So in the current launch, we've launched it out for payroll, and EOR is actually coming in the very near future to allow you to manage your own wallet. One of the things we didn't talk about here is Papaya allows you to open multiple wallets in whatever currencies you want to hold. So if you're a multinational company and you may have multiple legal entities paying out in different currencies and you want to fund in different currencies, you can, in a completely self-served way, open multiple wallets. Each one of these wallets comes with a designated IBAN or a local ACH account. So you actually get your own account on Papaya, which you can fund and then pay out. So naturally, EOR's next, and it's coming in the next couple of months. We're going to add EOR wallets to allow you to pre-fund all your EOR requirements as well.
Okay, thanks, Cyril. That kind of like answers part of the next question, but doesn't really put a number around it. So the question is there any limit to the number of countries you can add to wallets?
So here's the thing, that's the payout side. So we actually, in the payout, we can get to about 160, I think it's even growing as we're speaking, countries and different currencies in the payout. And in the pay-in, also there we support multiple currencies. So you may decide to start with one wallet, say a Euro wallet, and pay to the entire world. Or at some point you may decide I'm actually wanting to add a GBP wallet or I don't know, Singaporean dollar wallet or other currencies you may decide are easier for you to pay in. And all this is done on our platform. And you can manage that from a centralized location, see everything and just assign what project or what country you wish to pay out from which wallet. And we'll take care of all the regulatory issues and all the banking issues along the way.
And so the short response to that is there is no limit to the number of countries you can add to this wallet.
Okay, thank you, Ben. We got another question come in, and I do actually have a few more that have been kind of like pre-given to us. There are some people who have registered, but unfortunately haven't been able to attend the session today, which is being recorded. So if we read out and answer their questions, they're going to get their answers themselves. But we had a third question in the Q&A, and that is this service available to Papaya customers for an additional fee?
So the short answer is yes, but the fee is quite minimal. There is a setup fee for the wallet, which is currently set at $200 per wallet. There is also a per employee monthly fee of $3. And we also charge a fee for the authority payments or third parties in a given cycle, in a given cycle, given territory.
Okay, thank you. I think one of the questions we're probably all actually stirring around in our mind, because it's the really, really important one, is how does Papaya track this money? How does Papaya track the payment status? How can we see what is going on at any given point in time?
So here's the big thing. Again, as I mentioned, since we are on the banking rails and we are regulated, we actually track the funds all the way to the final account. So if you used to just send it to a PSP or a bank and then just hope for the best, and if the employee told you, hang on, I haven't received the funds, then you had to call up the bank or call up the PSP and they said, yeah, we'll get back to you in a couple of hours or figure it out. And maybe it's their high priority, maybe it's low priority. Because we understand these are payroll payments, we built the entire system from the ground up so that we know in advance when something's gone wrong. So it's on the highest priority for our teams, and you will always be able to see on your panel what's happening with every payment. Be it, is it being processed? Is it being screened? Is it landed already? Is it waiting a local screening? You get to know all that. Plus, the way the system is built is we'll ensure through penny tests and other tests in advance that we understand that this rail works for your employee. So we've already kind of test run that this money actually goes through and is marked properly as salary before your first cycle, so that extra cycles along the way, we know that they'll go through.
Yeah, and just to add on top of that, the reason we set about this journey was we understood that the current process is broken. So we learned firsthand that there are challenges with actually monitoring the payments of payroll, and that is why we set out to fix it. And that is why we also monitor it throughout the process.
Okay, thank you. I've got one pre-recorded question and I've got another one in the Q&A chat, which are very, very similar, and we can probably actually answer both of them within the same response. So the first part of it is, would my employee's bank show that the salary was received from Papaya or from me? And can we open bank accounts in our company name that payments to employees are made from?
Yes, so here's the thing. Every wallet you decide to open, and as I said, on our new platform, this is self-serve, so you can start off with one and then add more on, is attached to one of your legal entities. So if you're a multinational company, you may have multiple legal entities, and you may have a single one of them. That is the debtor account, what's known as the debtor for the money transfer. So when the money lands in the employee's bank account, whatever your legal entity was that opened that wallet, that is what will appear. So if you happen to be Acme Limited, that is what will appear. And if you have a subsidiary called Acme UK, that is what will appear for the payments that are sent out from there. That's the ultimate debtor.
And on the kind of the second part of the question, the wallets that are opened are segregated, which means that they are under the name of that entity that was opened up, and is essentially part of the company's assets.
Yeah, important to understand. Again, a regulated entity, so a wallet and money in that wallet is regulated under the local authorities, which means that these are your funds. This is just another asset. There's no, hang on, I need an invoice to place money in there. It's just another asset. It's just like you'd open another bank account, holding funds, waiting for payroll. This is what we give you in these wallets, which is, as I said, this is why you get your own IBAN, you get your own local ACH, depending in which territory you decided to open this wallet. But we give you all of that. And just as you'd get with any bank account, you'd get the account statements and any other thing and the reconciliation happening through our systems.
Okay, thank you, Bo. I think it's a really, really important point, and it is very, very important to some employees. You know, from an employee experience point of view, wanting to be paid in the name of the business that you're working for is something that they really do want. I've worked as an employee, I've worked as a contractor, I've worked through an umbrella. And yes, the money does come in from all different kinds of directions, but to some, it's just that final piece, which is absolutely, what they want. You've both mentioned a fund forecast. Can you explain how that works?
So yeah, if you could just put the slide of the forecasting on, I'll even show it. So remember, since we're sitting on the entirety of the payroll cycle, we know in advance when payments need to land. And as you know, these get updated along the way. So you may have, like, at the beginning of the month, based on the contract or the previous month, how much money is going to go out at the end of this month to this employee. Along the way, you'll have a salary update, and eventually you'll have the payroll summary that you're going to approve. Now, this happens along the month. What we do is, as I mentioned before, we run dry runs. So every time you update those numbers, or our system update those numbers, we'll actually forecast. We'll take into account fees. We'll take into account FX volatility. We'll take into account what banking rail is best for this. And what you get is a panel within our system. If you have multiple locations, it makes it even simpler, basically telling you at what point in time every one of these payments is going to go up. And they're stacked together based on your different projects or locations or payroll type. Like, you can have the contractors set up as one and just general payrolls as another. And you can understand how much money needs to be funded by any point. So some of you, or the treasury manager, may decide, I'm going to fund now for the next week all the multiple countries, or I may just fund the next upcoming one and then just wait another 2 days and then fund the rest. So we give you that control. You always get the forecast. You always know if the numbers are final or they're temporary, because we haven't got the final approval for the payroll summary. And this allows you to forecast. And as I said before, you can decide when to fund, how much to fund, and when to approve the payments.
Yeah, what I really like about this approach is it leaves the ownership with the company. The company can decide how to approach their working capital, and at the end of the day, be very, very efficient in their approach.
Okay, thank you. We've answered the questions about how the employees get the money, and we obviously know that part of it is really, really important to them. But from an employer point of view, from a business point of view, how is the solution secured? How can the business feel confident that their money is in the best possible place?
So there's two sides to this. One is the regulatory side, and the second is the banking security, maybe even the technical security. So from the technical security, we treat everything as hypersensitive. Different, even internally, our systems require keys to talk to one another. We have multiple anti-fraud, anti-money laundering systems along the way. From a compliance side, as I said, we're regulated in multiple locations, which means that the local regulator requires us to safeguard certain amounts of money against it and ensures that every one of the steps has actually been inspected, regulated, audited, and made sure that we can actually hold this license. Add to that the tech stack, cutting edge, everything, as I said, multiple security layers to ensure security, anti-fraud, and others are all put in place.
And just to add on top of that, because we manage both the payroll and the payments, it actually means less data being transferred from one organization to the other. And it ensures that you don't send Excels or reports to your banks to upload them. Everything is managed through the same platform. Again, removing an additional layer or actually increasing security and reducing the hassle.
And I think part of what I said answers one of the questions on how do we protect the money. So as I said, we're standing under the local regulations, which require us through the local banking regulations to safeguard the money and ensure that the money is completely segregated. So it's not just our promise to you, it's the regulatory promise to you that this is a secure account for you and the money is held in your name. Again, this isn't money placed into Papaya's account. This is money placed in your name as an asset, and we just manage it.
Okay, thanks very much. So I think that's kind of like all the questions that I can see in the chat at this moment in time. Is there anybody that'd like to take themselves off mute and ask their question? Please feel free. Just give everybody a couple of minutes.
Who opens the bank account? I can see. So again, this is a self-serve service. Once you come up to our system platform, once you're onboarded to our platform, you can decide about 3 clicks what currency you want. You'll go through a very basic KYC process to ensure that you are who you claim you are. And that's it. Your wallet will be assigned to you. You'll be given the local banking transfer information, basically your account number or the IBAN or the SWIFT code or whatever you need to actually fund that account. And that's how you open the bank account. So basically you.
Just emphasizing, Suriel mentioned the point about KYC, know your customer processes. Because we run the compliance process in-house, that too is done very swiftly. And assuming we get all the necessary data in advance, we can get the process done and dusted in 7 days, which is much, much faster than any other provider in this industry.
Okay, thanks. So we've got another couple of questions. One of them being, are all of the third-party payments done through the wallet and Papaya as well?
Sorry, can you repeat that again?
Yeah, the payments made out to local governments and authorities, benefits and pension providers, we have the ability to enable that as well, don't we?
So the short answer is yes. The slightly longer answer is in some markets, there are regulatory laws that require the funds to be transferred locally or something similar to that. So in every market where that can be done, we're able to provide that. And in the discussions that we will have with any one of you after this call, we'll be able to identify exactly which markets we can support. But the intention is to support everything that we can, of course.
Okay, thank you. We don't have any more questions. Nobody's taken themselves off mute to kind of like answer those. I would like to thank everybody for joining us today. I hope we've given you a lot to think about. If you're like me, you'll think of a question the second the webinar finishes. Please reach out to us or somebody else at Papaya and we will get your question answered. If you want to connect with either Suri Ger or myself, you will find our profiles on LinkedIn. It's been a pleasure hosting this today.
Thanks, Ian.
Thank you so much.